is what the range is likely to do on the daily chart. In other words, this hypothetical candlestick okay, let's say this hypothetical candlestick represents the daily chart. Okay, and I use obviously green. So let's use this here. Okay, so we have this scenario here where we're expecting the opening price. Now, again, think about this candle on the daily time frame. Right now we're looking at a 1 minute chart, so don't be confused by this, okay? I'm just showing you the logic. The opening price would be this price right here. I'm trying to correct all of you. Okay, I know you're overzealous and you want to go out and make your courses and your mentorships and all that other stuff, but you're actually hurting people. Okay, so there's a lot of reasons why I'm doing what I'm doing this last year, but pay attention, because if you're trying to rip me off and rebrand my stuff, at least do the benefit of helping the people that's going to be affected by you teaching my stuff incorrectly by doing it at least better than you used to. And that means by doing this. The opening price at midnight, New York local time, that is your daily opening price. I don't care what TradingView's opening price is when you put it on the daily chart and like look at the daily candle's opening price. That's not accurate. Okay, that's hours and hours away from what it is that the algorithm is going to refer to. You want to have New York at midnight, that opening price. Just pull up a 15-minute time frame and you'll have it. So you want to have that price noted. That's what I have here. Remember, we walked from the 15-minute chart and extended it out in time. If we're bullish, by having this level on your chart, you want to be buying at that level or beneath it. In worst case scenario, you want to be buying near it. So your thought process would be like this. On the daily chart, you're watching, and you'll see me doing this with live commentary starting in February, where I'm expecting the accumulation phase on the daily range to occur below a specific level. And you'll see how you're in the 90% club. Okay, if you do these types of things and your draw on liquidity, what is that? Well, let's just say that this level up here was the 38.95 level. Don't be discouraged or distracted by the actual price over here. But let's just say that was your draw on liquidity. Okay, I don't want to be unrealistic and say that you would have known about the volume imbalance had you not been watching the videos. If you would have watched the videos, then obviously you would have. But let's just say that was your draw on liquidity for buy side based on the weekly chart, based on what you expected in terms of higher time frame analysis. I can say this because you watched me do it this week. Even though I was looking for something down here, it matters not. What I'm showing you is the logic as how I shifted gears intraday Friday and worked in this whole scenario here. But you would be trying to buy below the midnight opening price. Don't be discouraged or distracted by the actual price over here. But let's just say that was your draw on liquidity. Okay, I don't want to be unrealistic and say that you would have known about the volume imbalance had you not been watching the videos. If you would have watched the videos, then obviously you would have. But let's just say that was your draw on liquidity for buy side based on the weekly chart, based on what you expected in terms of higher time frame analysis. I can say this because you watched me do it this week. Even though I was looking for something down here, it matters not. What I'm showing you is the logic as how I shifted gears intraday Friday and worked in this whole scenario here. But you would be trying to buy below the midnight opening price on any day. Don't think this is just a non-farm payroll event. You're trying to buy at the opening price or below on the daily candle when you're bullish. And if you get above the opening price like you see it doing here and here, as it goes back close to that opening price, you can be a buyer there too, if there's logic behind it. And the logic I used was these two down closed candles is a bullish order block. It's also a swing high. We went through it here. So this is what I teach you to look for what? The shift in market structure, meaning the market has tipped its hand to you that it wants to go higher. So if it's going to go higher, where's it going to go to? Well, you have an imbalance right here, right? Yeah, that's fine. You have a bearish breaker here. That's fine too. But look closely. Actually, take a step away from your computer screen, back up in your room right now. Look at this chart a little bit further away, about 10, 12 feet away. You're going to see these levels here are way too smooth. It looks too perfect. It looks too much like classic support and resistance. And here's a note that you want to have in your study journal. And anytime you see levels in your chart that are like this, or they're just too perfect and smooth, I always say this, okay, but smooth edges like to be made jagged. That means when it's smooth like this, the market will rip into that and make it jagged. It doesn't like to have smooth highs and smooth lows. It will always find a way to go back into those levels. It may not happen right away, may not happen the same trading day, but it will always look to go into those levels again. That's what the algorithm does. So let's go back to our analogy. Let's assume that this level here is this level right there on the daily chart. So that level, for whatever reason, we think there's something up here that is going to be a draw on price. Okay, liquidity up there is making the highest probability that the market will want to gravitate to that level. And that just happens to be on our daily chart. That's the level you would have. Well, while you're watching price, when it's down here like this, meandering around like it was doing here, I'm not paying attention to all of this. This is all based on the reaction to 8:30 in the morning at non-farm payroll. So I'm not worried about this price action. I look at this and ignore it. I want to see where the real range is. It's here. Then they did this fake run. Okay, it looks like it's going to break this, but it doesn't, and tears off, goes lower into our buy side imbalance, sell side inefficiency. Then we wait. Does it break lower? I'm not chasing it. I'm just observing it. I'm watching. I told you, note 38.14. See if it can get down there. It didn't want to do it. Then it rallies away, leaves this area in here, and I gave you the two wrong price action levels. If you look at this low here, you're looking at this price right there. If you look at this, 38.25, and I said 38.39, I believe it's what I tweeted, and it was inaccurate. I apologize. 38.39.25 is wrong. And I was looking at this level here, the high, 36.75. So that's what I was looking for, and I was watching. Obviously, you knew I'm looking at a 1 minute chart. I was commenting over a 1 minute chart, but I wanted you to have that on your chart. I told you to have a line on this level and this level. Reason why, because I was going to come back and talk about this level today. More specifically, I was going to do it Friday, but I didn't have the time to do it, but I apologize. But the market wasn't able to get down to that. And then with this short-term high, it breaks above it. So there's a shift in market structure there. So I'm looking at all of this area here below the opening price, and now this level is this. Conceptually, in my mind, this is what I'm seeing the algorithm refer to. I don't care about this. I don't care about every candle prior to that. See, when you're looking at price action, you're getting caught up in all of this noise. My focus my absolute focus is only here, right there, inside that box. That's what I'm focusing on. That's the initial framework that the algorithm is going to work within. Why? Because that's the dealing range. This is where we are. This is where we made the high for the day. We've left liquidity in place in the form of buy side. We've broke down back into a discount. We have not went lower. We created a short-term high. This range was not closed in or even retraded to. Then we had a short-term high broke there with this candle movement higher. So in my mind, I'm thinking this level here, this line represents this here. So I'm looking at the daily range like this. Even though, okay, that we have traded up here and we've already essentially been here, I don't care. I'm thinking about it just like the algorithm will, if we want to personify the algorithm. So when it's coded to refer to an old dealing range, that's what this is here, this high to low, I believe it's going to do what? Expand outside of that range in the form of external range liquidity. It's going to go outside the boundaries created by this high and that low in the form of a up move. If I'm just looking at this shaded area here, let me do this. So inside that, and that's not a nice color. I'm looking at this shaded area in here. And I believe it's likely to go from here, if it takes out this high, from here up to here. So I'm envisioning the daily candle looking like this right now. Even though we've already been here and came down, right now the algorithm is thinking, okay, we're real close to the opening price at midnight, which is right there. We ran above it, so it did this. It went up a little bit, and now we're back down inside the middle of the range that would be represented by this low to this high. And then when it drops back down, it's getting real close to that opening price again. So it's doing something like this. Okay, and I'm anticipating that the daily range will now expand up into this level here where buy side would be, which is represented by this high here. That's why this red line is being annotated on the chart. So I'm expecting price to keep gravitating higher, and that would be something like here, and then continuously gravitating towards that high like it's doing here. I'm not getting tricked into thinking it's going to go down. This level is way too clean. Clean being it's smooth. It's like relatively equal highs. The market's not going to leave that. And I actually tweet also, I said, I do believe we're going to go to 3876.25 because it's so close it would be criminal to leave it intact. Okay, so all this time it's dropping down, I'm not worried about it not going up there. So it gives you the confidence to stay with the idea. And then finally, when it runs above it, like that, this is what the daily candle looks like. And I'm going to watch and see, does it keep digging into my next objective, which would be an old high. And the whole time it's doing this expansion up, higher, higher, higher. And we're not thinking, oh, it's going to collapse in reverse, because the candle, if it's going to have a big move like this, it's probably going to close near or at its daily high. Now think about that, because if you can do this, you can hold on to the last hour of trading, which would be 3 o'clock. And then something happens at 3 o'clock I've already taught you, or I've introduced to you, where the market can come back into its range. And I want you to see it like this.